Crypto wallet provider blockchain.com reporting over 36 million verified users in over 200 countries after a threefold increase in active users in the past 12 months. Joining us now to discuss is Lane Kasselman, Chief Business Officer at blockchain.com, a crypto wallet provider that accounts for about 1/3 of all Bitcoin transactions. Hello there, Lane. Thanks for joining us. So we have another all-time high kind of day for Bitcoin. Perhaps you could give me some insights on what is driving this surge. Why now?
Well, I don't have a crystal ball, Christine, and I'm happy to be here. But I think there's a couple of things that are really driving what we're seeing in this amazing rally in the price of Bitcoin and Ethereum. There's the macro and there's the micro, right? So macro, the world has realized crypto is permanent. It's here. It's not going anywhere. It's not just a startup idea that has a brief moment in time. So we're seeing that realized both from regulators, from financial institutions, and certainly from customers moving to the space in droves. But I think there have been a couple of things that have happened in the past week in the micro that really are helping to drive it. I don't know that you can point to any one, but I think between the mayor-elect of New York deciding to take his paycheck in crypto and then being challenged by the mayor of Miami and taking all of his paycheck in crypto over the next year, to the fact that Tim Cook said that he is a holder of crypto as well. There's a lot of things leading the news right now that I think are causing some fever and excitement.
Very positive for Bitcoin. You also have a couple of milestones. Blockchain.com accounts for, as I mentioned earlier, 1/3 of all Bitcoin transactions, hitting $1.5 billion revenue, 8,000% headcount growth, $1 trillion in transactions. Quite, impressive growth that you're seeing. What kind of trends are you seeing in terms of wallet activity geographically versus retail versus institutional?
Yeah, so fortunately at blockchain.com, our business is really split 50-50, half retail and half institutional. So we do get to see both sides of the market very clearly. On the retail side, I think, most of your viewers and the companies you focus on are seeing similar trends, and consumers are adopting it quickly. Now, what's interesting, though, is where those consumers are adopting quickly. Of course, there's a lot of excitement in the US and, Western Europe, but we're seeing rapid adoption across Latin America, certainly in Africa and Eastern Europe. The numbers of new users in those markets is just incredible. On the institutional side, it's still being driven largely by crypto native institutions. So market makers, hedge funds, high net worth individuals and VCs, those types of institutions, and of course, crypto hardware companies. They make up the majority of the institutional volume across companies in the sector. And we're starting to see some cracks in that where more traditional TradFi companies are getting into the space.
So speculators on the institutional side, but really interesting about the emerging markets, and it leads to that banking the unbanked narrative in the Bitcoin community. But I wonder if you see any headwinds for Bitcoin coming up, any regulatory or otherwise.
So, I think it's a double-edged sword, right? So on one side, and what I'm referring to is a permanent regulatory framework. So on one side, there are, I think, folks in the crypto community who are very resistant to the idea of any regulation in space because crypto has thrived despite the heavy hand of regulation. But there's others, myself included, and our company, that really believe in a permanent regulatory framework, knowing that it's going to require compromise. But the reality is crypto can't continue to grow without regulators on board, and they're not going to join our community until they feel comfortable that consumers are protected and that there are strong controls in place for anti-money laundering and knowing your customer. Well, so we're just at the beginning of a 2-year period right now in which I think those regulations really get developed across the Western world.
And in some cases, it could be, developing haphazardly. Though there's a $1.2 trillion infrastructure bill that was passed by Congress. It awaits a signature of President Joe Biden. There are a couple of controversial crypto provisions in that one that basically defines miners as brokers, another that places digital assets in a category with additional tax reporting requirements, basically requires anyone who receives more than $10,000 in cash in one transaction to report the sender's personal information, including their social security number, to the government within 15 days. I wonder if any of these, provisions impact your business.
So I think when thinking about regulation at the U.S. federal level or at the EU level, it's really important not to have a short-sighted or amateur perspective on it. Regulation is forever, and the companies we're building today are forever companies. And so we're just in the first inning of developing regulation. Yes, agreed. Some of the provisions in the infrastructure bill are untenable, but they don't go into effect for a couple of years. And there will be lots of regulation introduced between now and then that has an impact, maybe adjust, maybe correct some of the problems. There'll be stuff the crypto community loves, and there'll be stuff that we hate. But the fact of the matter is, this just started and it's never going to end. So we'll need to continue working with regulators to get what we want. Look at every other major industry around the world. It's not as if they get one set of regulations that are created and just sit there permanently forever. They're always getting tweaked. They're always getting changed. They're always evolving. The same thing's going to happen here. And it's uncomfortable because there's always a bit of uncertainty. But that's unfortunately the reality that we are now faced with.